Mr. James Hughes from Axitrader. So James is a senior analyst. He has been with Axitrader over 17 years of experience in the trading industry. His knowledge of the financial markets and retail trading is vast. Okay, James' experience has seen him become a regular commentator on many of the major news channels in the UK, including the BBC, Sky News, CNBC, and Bloomberg. He's also hosted seminars on a number of trading topics at conferences around the world. James, have you been to any of those countries of the 22? Oh, good. So please, guys, let's welcome James Hughes to the stage. And James will be discussing merging fundamental and technical analysis.
Hello, everyone. Thank you very much for taking your time. I'll try not to take too much of your time up today. I'll try and stick to my 15 minutes. So, yeah, I'm going to talk to you a little bit about fundamental and technical analysis. Now, I do have slides, but I am very much one of those people that has slides but tends to forget after about 5 minutes that I do have any slides, and probably will just talk over a number of just different subjects that have nothing to do with the slides. So I will try my best to actually keep to them. Okay, good. But of course I'm going to talk very, very basically, and of course we don't have too much time, but I'm going to talk very basically about why you should use both these forms of analysis. Now, we're all told as traders, we're told we should use technical analysis, we should look at these charts, we should use this indicator, we should use this, we should use that, and really as traders, and I'm a chief market analyst, I've been an analyst for 17 years now, and still there are so many forms of analysis that, number one, I don't understand, number two, I don't want to understand, and number three, I just don't know how they're going to make me any money. And that's obviously the reason that we're looking at a lot of these things. And sometimes we can get bogged down in the amount of things that are out there. And we see charts which are absolutely covered in lines and covered in various different points all over our charts. And to me, a lot of the time, they mean nothing. Now that doesn't mean that all of this great analysis which is out there is rubbish. Of course, this analysis is there and it works and it exists on our trading platforms because at one point in the past, someone has made money using these various different things. And of course, you'll speak to people and someone will come up and they'll say, or they'll come and speak to us at a stand, or they'll speak to us over the phone, and they'll say, I used Fibonacci retracements, and I think Fibonacci is an absolute load of rubbish. I won't ever use Fibonacci again. It doesn't work. It's rubbish. And the reason people say Fibonacci is rubbish or various different things are rubbish and they don't work is because at one point they tried it and they lost money. But the whole reason it exists is because at one point someone tried it and it made money. And everything is about trying to make things work for you as well as going along with what the market says. And my first bit of advice would be just not to really listen to too much about the things that you don't want to look at. You know, there's so many different things, and someone will say, oh, well, I'm a day trader, and I look at this moving average, and I look at that moving average, and I look at this technical indicator, but it hasn't worked for me. If it doesn't work, don't use it. If it doesn't work, just move on and do something else. Use another form of analysis. Use one of the millions of indicators which clog up our trading platforms all the time. There are so many things out there which do work. And for me, it's all about keeping things simple. There is one number on your chart, and I'd love to have some charting up, but there's one number on your chart which makes or loses money for you. And it's not the RSI, and it's not the moving average number, it's the price action. The most important line, the most important number on your chart is the price. And we can all become too bogged down in all of the other indicators that we have attached to our trading platform that we kind of forget that the price is the thing that makes us money. That the price going up or down is the main point of call for us. So it's really important to make sure we keep our eye on that price action. Don't get bogged down by all the other stuff that's out there. It doesn't necessarily always work. And when people say to me, what's the best form of analysis that you use? Well, the forms of analysis that work the best are trend line, support and resistance. And yeah, that's simple as anything, and it's incredibly basic. But the reason it's incredibly basic and the reason it's so popular is because it works. And people will say, well, I'm not going to use support and resistance because everyone uses support and resistance. Well, my answer to that is, if everyone uses support and resistance, it means that when you get to big support or resistance levels, the market is going to react because everybody is using them. So it makes it more worthwhile. People always say, well, I don't use technical analysis. And we're going to talk a little bit about the difference between fundamentals and technicals and why we should use both. But people say, well, I don't use technical analysis because it's a self-fulfilling prophecy, because everyone's on it, so it kind of, that's the only reason it works. Well, who cares about the reason why it works? I don't go out looking for a reason that I made money on a trade. I'll just gratefully accept the fact that I did. I don't care why it worked. I don't care about those things. I care about why something doesn't work, but if something works and it's because it's a self-fulfilling prophecy, well, great. I mean, self-fulfilling prophecy or not, it still means that it was a profitable trade and that I used it I used it and I will continue to use it. So self-fulfilling prophecy or not, that's why I'm going to continue to do it. But of course, using technicals is great. Making sure you're not clogging your charts up with millions of different indicators and lines and everything is also great, but you have to make sure that you're pairing it with fundamental analysis. Fundamental analysis is incredibly important. And people will say, again, they'll come to the stand or we'll talk to them and they'll say, well, I only use technicals. And they say, and they'll go, I only use technicals and I trade when there's the most volatility. I go, okay, great. Well, when is the most volatility? When are you using these technicals? And they'll say, well, I'll trade over the figures. And I'll say, right, so you're using technical analysis over the figures, of course, the figures being fundamental analysis. And of course, over volatile figures and volatile bits of economic data, that's the only time that technical analysis doesn't work, because technical analysis and big levels are smashed out the way because the non-farm payroll came in 10,000 jobs out of whack. So the Dow went up 7,000 points or whatever it may be. So they're the only times that they don't necessarily work. So marrying the two together is really, really important, and making sure that you've got almost a basic understanding of both is key. You don't have to be a qualified MSTA to make money in Forex trading. You don't have to be qualified in technical analysis to do it. You have to know what works for your trading strategy and continue to do that. And that's the key thing. And there are people that will sell you courses for tens of thousands of pounds to tell you that you can do this and do that, and that this is the best indicator, and they will give you a stack of paper that gives you every indicator under the sun, but it's not going to help you if it's not something that you can digest, and it's not something which is simple enough for you to work. So it's definitely a case of keeping these things simple. As I told you, I'm just going to talk without these slides meaning anything, so I apologize. I will just slip to the next one just to make it look like that I am using them. Moving averages. Actually, let's just go back to that because I do want to actually touch on something that I said before. People that use fundamental analysis, of course, it is vitally important. And the world we live in at the moment is dominated by fundamentals. The trading world we live in is dominated by fundamentals. Now, take for argument's sake, I work in the Axitrader in London. Of course, I'm not going to stand here and talk about Brexit, don't worry, but there's one subject which dominates where sterling is going, for argument's sake, and of course, that is Brexit. Now, we could slap on every single indicator that we could find. We could look at key support and resistance levels and try and manage those from that point of view. But if Boris Johnson says something about the Northern Ireland backstop, then everything is blown out of the water. It means nothing. And you could have spent months and months and hours looking at the various different points that you've got on there, but it will mean nothing because the fundamental data, the fundamental information, completely overwrites what you're looking at. So don't feel stupid when you're trading and a certain form of technical analysis doesn't work, because that's what this industry is really, really good at doing. Trading and Forex trading is really, really good at making you feel stupid, because you'll place a trade and it will lose and you'll go, I knew I could never do Forex trading because it's too complicated. The best traders in the world are traders who know how to lose money. They are the best traders in the world. They understand how losing money is the most fundamentally important thing to trading. If you know how to lose money, then you will be a successful trader. And that sounds like a contradiction, of course, but it isn't. If you can do that and know that and if you know that trading, fundamental Forex trading, technical analysis is going to make you look stupid, then you know that you're on the right path. That is a key point, okay? Now, that's not to say that I'm the most successful trader in the world. If I was the most successful trader in the world, I would 100% not be standing up here telling you all about it. I'd be doing it on my own and don't care about anyone else. But it's key that you understand that there are some real key points to trading which make me and you look stupid, but they are really important in your journey to do it. So, and as I was saying, the fundamental part of the world, the world is dominated by fundamental trading. Fundamental trading is everywhere. I've used the example of Brexit, but you can take that away and you can completely ignore Brexit, but you can still look at the same currency pair and apply something completely different to it. So say for argument's sake, we're looking at cable, we're looking at GBP, US dollar, okay? That's our key thing. And say for argument's sake, we completely remove the discussion of Brexit. We're not looking at Brexit or anything UK-based at all. We could then, all we do is we slip over the other side of the Atlantic and look at the fundamental data and the fundamental news flow which is dominating the market there. And we know that if the fundamental data out of the US, and I'm not talking about the payrolls, I'm not talking about any economic data, the Fed or anything like that, I'm just talking about what comes out of the mouth of Donald Trump. Because that is what dominates the market. And don't feel stupid at the fact that maybe, oh, I'm not looking at what Donald Trump says, or we belittle Donald Trump for what he's putting on Twitter, because that is the fundamental driver of everyone's trades. What Donald Trump says and what Donald Trump does is the fundamental driver for every position that you place. Okay, and we can easily look and say, oh, well, our trading is this, our trading is that, and my technical indicators are doing this and that, and none of it means anything if Donald Trump comes out and says the Fed aren't moving interest rates as fast as I think they should, which he's done 4 times in the last 3 months. If he does that, the market goes crazy, and there we are. All of our technical analysis, which we've been spending hours and hours looking at, is completely blown out the water yet again. And that's just on one thing. That's on Donald Trump talking about homegrown things. That's Donald Trump talking about his own economy, talking about the Federal Reserve and what happens with the Federal Reserve. Now, we know that Donald Trump's #1 topic of conversation is not the Federal Reserve. It's not the United States of America. Donald Trump's #1 topic of conversation is everybody else's economy, everybody else's problems that they have, and of course, China. Now, the one thing that we would always say when there's no news flow out of the US, where do we have to look? So when the US markets are closed, we always say, especially from a European point of view, in Europe, our trading desks are dead if the US is closed. So on a US holiday, half the traders in the UK aren't in, because we know that if there's nothing going on in the US, there's nothing going on in Europe. However, what we do have to look at is, of course, China. And we have 2 of the biggest superpowers in the world, the 2 biggest superpowers in the world, fighting on a daily basis about trade. Now, this has been going on for 3 years. We've had 3 years of people talking about what's going on in terms of the US-China trade war, yet we still try and apply all of our technical analysis, even though we know all it takes is an official in China or someone in the US to come out and tell us something which is going to completely blow everything out the way. So the world that we live in is dominated by fundamental trading. It's not dominated by technical analysis. Okay, it used to be, and we used to be able to make a very, very easy living on support, resistance, trend lines, Fibonacci's, and basic technical analysis. But we just can't do it anymore, because we cannot legislate for what is happening in the US, what is happening in China, and what's happening in the rest of the world, because that is the dominating force. And even if you take out the US, you take out China, I'm just going to forget about these slides now because I'm not going to use them. So even if we take out the fact that we've got the US and China, and we take out Brexit, we can look 2 weeks ago at Saudi Arabia and what happened to the oil fields in Saudi Arabia. And then that dominates the markets. That dominates the Aussie dollar, it dominates the Canadian dollar, it dominates all of those markets, it dominates all of the stock markets. It really does create everything in terms of that whole fundamental picture shifts in one other way. And we could say, okay, well, we're quiet in terms of the US. We know the US isn't doing anything. We know Brexit is quiet. And then you have a situation with oil. And we know oil dominates the market. So without those other things coming in, and we know, and again, look at the US-China situation. The US-China trade discussion all centers around trade, of course, but what is the bottom line which is affected after that? Well, we're talking about global economic slowdown. And why is there global economic slowdown? Well, we're talking about that because the tariffs which are being added on China, and the issue then in China is that productivity is down. Productivity and output is down, which has a factor on what? The oil price. So the oil price is again dominating us just because there is a slowdown. And if you take a look at if you look at earnings season over the last 2 years, 3 years maybe. Sorry, not 2 years, 3 years, 2 or 3 quarters. Every single company, not every single, that's me exaggerating, but a lot of companies, and you look, and the majority, at the last earnings season, 77% of companies that reported in the S&P 500 reported better than expected earnings, okay? Now, those ones that didn't report good earnings, they were all putting the blame on China, an economic slowdown in China. And there is one company that I want to talk to you about very, very quickly before I finish, and I know I've eaten up all my time already, but there's one company that I will talk about, and I'm not a single stock trader in any way. I don't look at stocks, hardly at all. I know that fundamental analysis is important, and I know fundamental analysis doesn't just, if I trade Aussie Kiwi, I have to look at the US dollar, I have to look at the UK, I have to look at earnings. So there is one company that's really important within this situation, and that's Caterpillar. So Caterpillar, massive, enormous company. I know you're coming on the stage to hurry me up. There is one, Caterpillar, an absolutely enormous company, and the one reason that company has had, not the last quarter was all right. Quarter before that, 2 quarters before that were terrible. And they spoke about an economic slowdown in China. Now you look at any construction site in the world and there is a Caterpillar something on it. Caterpillar is a bellwether for the global economy. It is enormously important. And when a company like Caterpillar is under pressure because of a Chinese slowdown, you know that there is a problem in terms of the global economic performance. And that means that all the technical analysis that you do, and all the technical analysis that everyone's going to teach you that you talk about today, it doesn't mean that it's important, it doesn't mean that it's not important, doesn't mean that it's not going to come back and be incredibly important to all of our trading. But at the moment, there's only one thing that drives these markets, and it is fundamental trading and fundamental analysis. Really, really important. But if you are going to look at technicals, you have to marry them together. Support, resistance, trend lines, they are popular because they work. Thank you very much.